Hey guys, Mike here. So another big week ahead for us, and it looks like our old friend Jerome Powell will be speaking this week. I have no idea what that man will be talking about, but he'll be speaking along with many other Fed presidents, and we got a bunch of economic data that will be coming out that will absolutely move the markets one way or another. And I got some interesting data about the upcoming week and then December, especially when it comes to some big stocks here and how they normally perform. But of course, what did we just get through? We got through Black Friday sales, right? What have retailers been telling us, like Walmart and Target and Home Depot and Lowe's, right? That they're expecting a more slower, seasonal type holiday sales number and everything. But what's funny is we end up setting another record, and I don't know what this is broken down as far as like online sales versus actually in-store sales. But it's an all-time high of $9.8 billion, 7.5% year over year. And we know a lot of that has to do with the fact that prices are higher. Just because inflation has come down, remember, that's how much we raise prices by. They have still been raising prices all year long, just at a slower pace than what they were before, a lower percentage. And so we know a lot of that's what that is. Plus, we enjoy running up our credit cards and stuff. And so you can see even like Shopify was in on this, and they say Black Friday record with a combined 4.1 billion in sales. Ended up being like a 22% increase in sales over last year. And so definitely online, again, I just don't know what in-store as far as Walmart and Target and the Home Depot and Lowe's and how they were affected by the Black Friday sales. But it shouldn't be a surprise. I mean, obviously, you'll keep seeing this and I'll keep updating it. But as, excess savings have come down, you still see that bar is still higher than it's, pretty much ever been going back there. I mean, you can see that little dot right there. And I think it was 2019, 2020. And so we still have a lot more savings than we had before. A lot more, people are obviously using credit cards and also doing buy now, pay later programs as well. So definitely watch your Monday. We'll see if, upstarts, and we'll get into the Amazon chart and the Shopify chart and all these different like fintech companies on top of that. See how they're doing. Obviously, Visa and MasterCard will probably be up because they benefit from us doing this because nobody really carries cash anymore. Now, as far as what that's going to do to the market, you can see right here, the NASDAQ, this is getting a lot of press right now. This has been going on for a while, since June. Well, on the weekly, you do have bearish RSI divergence. Doesn't mean it's always going to work out, right? I mean, here you had it right here, and of course it worked out, but that was 2022. That was a sell-off, right? Now we're doing a major move up, leaving basically fair value gaps behind like crazy. And so it doesn't always work out. This is a larger time frame. And it goes both ways. I mean, when you look at this right here, you can see there's your bearish divergences. Yeah, they end up working out. That's a nice little sell-off to the left right there. But you can also see when bullish divergence happen, right? Like here you're getting lower lows, right? And that's at the bottom right there in October. You see there was bullish divergence up. That actually played out very nicely. So it doesn't always play out, but a lot of people are talking about it. So just be aware of that. On the S&P, all you're looking for, really for me, what I'm looking for is to break above that trend line, right? It was our third touch. We got it. We're just kind of sitting right at it right now. So we'll have to see if we finally do break above this. I'd like to see, if we do get rejected here, which I don't know if I'm expecting that, because normally the last week in November is usually pretty darn good. And so that's something we got to keep in mind. And then usually you see weakness like from maybe right at the beginning of December until like the first week and a half. And so we'll have to see if that ends up playing out. But I'd like to see if we do see weakness, if we come back down and end up closing that fair value gap, the RTH gap, and maybe even testing October highs for a bounce and turn that into support. That would be much more bullish to me when you're looking for a move up for a long term going towards those all-time highs and stuff, if that's going to be the case. And S&P is obviously a much weaker than the NASDAQ, just because obviously the Magnificent Seven make up so much more, and a lot of tech stocks and AI stocks have been running, and the NASDAQ has a whole lot more of that, and the S&P has sectors that have been a little weaker. And so, then going to IWM, probably going to get another 200 moving average retest. Obviously, the last two times we tried it, we got rejected. And so, again, setting on that trend line, as you can see, been moving up. RSI looks just fine right here. Don't have any kind of bearish divergence going on or anything. And so, again, we'll see if what I always like to call the breath continues to move out. I would absolutely like to see it come down and test that trend line right there before it actually does another move up, if that's going to be the case, because it seems to be kind of consolidating right here. Some people would actually come off and say, well, that's actually a bear flag, so it's going to come down. That could be the case. But when you look at it, it is in the volume gap. If you can get above the 200, definitely going to go to 183 pretty quickly because that's just the way this index actually moves. Now, when you're looking at Amazon here, and guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. Because of the great sales numbers they're putting out there, you could see some movement in this one. But that resistance line is really all that matters. It's sitting there right kind of on top of it right now, but it's having a lot of trouble getting through to make that move. And if it can bust through it, retest it, 150 is going to come pretty fast. After that, you're looking around 160 before you hit major resistance right there, which I expect to absolutely be a major resistance point for it, because that is all-time highs right there to the left, as you can see. And we're not, really far away from it. You think of a percentage and stuff, and nothing. If you look at strong sales data, yes, that can absolutely help this one, because most of it's going to be on lines, my bet. But you can see this is another one, bearish RSI divergence on these larger time frames. Again, huge run-ups. Wouldn't surprise me to see sell-offs, because you see a big fair value gap left behind on this one. But again, watch for the dips. See if the dips are getting bought up. Shopify is another one we talked about. Once it breaks above that trend line right there, which it did, and left a gap behind, like 9 straight green days, finally hit what? Around that $70 mark is what we talked about, which I'd love to get to. That's where it's running into resistance, so no surprise there. You can see that'll probably be support around like 66 if it decides to pull back and show some weakness and everything. But looking at the larger time frames, I mean, you can see that trend line right there, which goes back to 2018 right there. That's what I'm looking at next is resistance as well, which would be around 72, 73 area if it does get above the $70.50 mark. So just look for that right there. If you're looking to try to get on a pullback, that's when I expect definitely to have a pullback on this one, just like we did with all these other stocks I show you on these longer term trend lines and stuff. But again, this chart's still a hot mess. I mean, it's making a nice little comeback. And when you look at this, I'll bring up that 30-week moving average we talk about on the weekly. And you can see, I mean, obviously, you can clearly see a stage 1, stage 2, stage 3, stage 4 right here, right? And now we're trying to go back into stage 1. It seems like we've already done stage 1. So is this going to finally be stage 2? That is what we're looking at. It looks like stage 2. But again, it depends on what goes on in 2024 for that to happen and stuff. Don't expect what you saw in 2020 to happen, because when everybody was shopping online. So that was the best you could get, right? So don't expect anything like that, because that's when we shut down all the physical stores and everybody had to go online. Now, NVIDIA is another one of these ones. You're seeing the same thing. It has bearish divergence, what seems like forever. I mean, for months and months. But, you get your pullbacks, but the dips get bought up pretty quickly. And what's going to be interesting to see if this plays out, December is normally one of the worst months for NVIDIA, but the truth is, historical data on NVIDIA is tough to go by because things are different, right? It wasn't tripling its revenue and reporting these crazy revenue numbers during these earnings, and it wasn't number one in what we call AI now, right? This big AI boom. And so I don't know if that's really going to play out or not. We'll have to see. Probably not when you look at it. But again, if we end up getting a pullback, you can see right here in your volume profile, 473 right there will be a good area, it looks like. And then below that, probably around like 459 if it gets below that. And I mean, I think that's pretty good support when you see a bounce right there. And again, this is another one where the dips are just getting bought up like crazy. And AMD, very simple. We talked about this downward trend line for quite a while now. That's where I expected to get rejected. It did. And now I'm expecting it to get, broken through to go back into what was a supply area for that shaded area right above before you end up getting a pullback to test that trend line to turn into support, because that's all-time highs to the left over there. And so, again, the area is very thin up here for it, but it has had a huge move up right there from that $93 mark. So, would I like to see it get a nice little pullback? Sure, come back down into that supply area. But when you look at this, there's nothing bearish about it. You don't see any bearish divergence on the RSI on the weekly. You see a bullish MACD cross on the weekly, like some of these others. And so, no surprise there. But again, this is another one. I think the dips will get bought up really fast. I mean, it looks like it kind of wants to take a break here, which you can imagine makes sense. So we'll get to see. Now, Tesla, starting off on a smaller time frame here, because this is the most highly traded stock out there, really. And when you look at it, always got the prior weeks, prior days high, support level, prior days low, marked out and stuff. If we do continue weakness, because it has been showing weakness, but the dips have been getting bought up, look for that prior days low right there. If that gets taken out, then you can bet money we're probably going to be heading down around that 225 area right there to go ahead and mitigate that RTH gap, regular trading hour gap. You can see MACD right there on small. This is a really small time frame, like 15 minutes. But since it's the most highly traded, it's what I'm expecting to see on Monday here. I'm watching for at least tomorrow to see if the weakness continues. And then you can see a really nice bounce from that area. Because we keep seeing if there's a sell-off, usually it goes down 1, 2, 3%, and then boom, buyers start piling back in to push it back up to those certain levels. Again, though, the 200 is right there. It intersects that trend line, which we've bounced off of multiple times now, and that's in that volume gap. And it would make sense, because a lot of confluence right there, to mitigate the RTH gap, bounce off that trend line, also in line with the 200 moving average. That would be a strong bounce area. Plus, you see all the support below it on the shorter term right there. So again, now if we start to move up, watch for the prior week's high, right, to get a rejection. But again, you can see we're still in that wedge. All we're doing is wedging, right? In the long run, when you pull out, we're just wedging right there. And so just kind of keep that in mind if you're into Tesla and stuff. Now, Palantir, no surprise here. It's got weakness because you had the CEO selling a bunch of shares. The big contract you were supposed to get didn't come in as big as what they said it was going to be or anything. But it's no surprise also, I always say watch for institutional ownership. And as institutional ownership has increased, going back to when this AI craze started, obviously the price has increased, right? And so again, this one's still setting. As you can see, I got trend lines kind of drawn out here for support, resistance. There's gaps, everything else. But, it breaks down. You can kind of see where the levels are, right? Around 18 will be a good support for this. If it goes even farther below that right there, you can see on the weekly for sure where it's heading to, which normally is going to be 15, 17. And then if it breaks up, you can see, because you see we're at support right now, right? So around that 19 area, so it breaks down below that. Obviously look for around like $15, $16. But if it goes to move up, you can see plain and simply 25 is going to be where you want to see it move to, or where you're going to see it move to. And it could move, fairly quickly. Again, this is another one, has some, bearish RSI divergence on the weekly down there. As you can see, RSI's lower highs, and the chart says higher highs, right? Now, when it comes to earnings, there shouldn't be anything that moves the market at all. These are a lot of high beta stuff. Then there's your retailers on top of that, as you can see. And obviously the big names are going to be like Tuesday afternoon, CrowdStrike, Intuit, Splunk, which a lot of people know. And then you got a bunch of retailers, Foot Locker, Dollar Tree, Petco, you have Hormel Foods on there. And then big names like Snowflake, Salesforce, Okta are going to come Wednesday after the bell right there. Watch for Pure Storage, because that actually will tell you if they're having good numbers come out and they're building a lot of storage places. That's something you see come up when people are preparing for a recession, because people have to downsize and put their stuff in storage. Then you have Five Below, Victoria's Secrets. Then Thursday, Kroger, TD Ameritrade right there, Big Lots, Academy Sports. And then Marvel, which is another semiconductor. Ulta Beauty, so many beauty stocks have been on fire. UiPath, then Dell as well. And then Friday, nothing. And then when it comes to economic data, there will be a lot of economic data this week, guys, okay? You'll have some stuff on Monday, maybe Dallas Fed, manufacturing, industrial information, which, people just don't seem to care about industrial right now. It's in the toilet. A lot of housing price data coming out Tuesday, especially when your S&P, Case-Shiller home prices coming out, CB consumer sentiment, and then Richmond Fed manufacturing data when it comes to services and manufacturing. Like I said, a lot of Fed presidents. You have Dallas Fed Services Index, revenues as well. No kind of bond or note auctions that should affect anything at all, as you can see. Wednesday, a lot more mortgage data nobody's probably going to care about. And then you end up with core PC prices quarter over quarter. GDP growth, which are expecting a big jump from 2.1 to 5, and if that happens, that will. So you can see all they have to do is get around above 2.1, and that's actually. It depends on which way the market wants to go, right? Whether it's going, oh my God, it's too hot, the Fed won't cut now, or they're going, oh, economy is strong, let's go ahead and keep things going, right? It depends on how they want to do this. And then you can see PC prices quarter over quarter as well. Real consumer spending, quarter over quarter. Inventories, which I don't think anybody's going to really care about anything. Oil prices, nobody cares. And then on Thursday, you're sitting there with continuous jobless claims, initial jobless claims, core PCE prices, month over month, year over year. They're expecting a drop in this. So that can absolutely move markets if it comes in lower or even lower than they expected. yeah, you're going to see yields drop, and that means the market's going to pump hard, okay? PCE prices as well, personal income month over month, personal spending month over month. They're actually expecting a decrease, quite a big decrease on this one. So that's going to be interesting to see. Then you'll have Chicago PMI, pending home sales, all that fun stuff. Again, no auctions that should affect anything. And then Friday, again, I don't know what this guy's talking about, but you see Fed Chair Powell is speaking at 11. I don't know what he's talking about. Before that, you'll have S&P Global Manufacturing, construction spending, ISM Manufacturing. So this data is going to be interesting to see how the market digests it, right? Normally, everything's been about because remember, they have like 4 rate cuts from the Fed in 2024. So why would the Fed cut rates if our spending is through the roof and economic data is coming in super strong? It would make no sense. So I want to see what the market's looking for, right? Because that's what this has all been about. And with some of that data, you're going to see it. It's going to affect yields in a big way, right? And so watch that, because if yields spike, the market's going down some. If yields go down, like spike down, you'll see a big move, especially in tech stocks and things like that. So that's really the big thing to watch for this week. And it's going to probably take months, but you're just looking to see if this is bad economic data. When does bad news for the economy become bad news for the market, right? Because this whole rally, really, and everything, it's a Christmas rally, but it's also based on the Fed pause, okay? Because remember December, I think it's the 13th, if I'm not mistaken, I have to check my dates, where the Fed's going to meet. And if they don't raise rates, that pretty much solidifies a pause at that point in time. At least the market's going to see it that way. So just keep that in mind. So anyway, hope you guys got something out of it. Hope you had a great weekend. Please hit that like and subscribe button. Really appreciate it. And I'll see you guys tomorrow.